Hey guys, welcome back. Casey here with Lions Den Investments and Reviews. In today's video, I just want to talk about the stock market real quick. We had a 650 point drop yesterday on the Dow Jones, and I want to talk about where I think that's headed. And we're also going to cover something called the 80-20 strategy when it comes to investing, because I had a conversation with a friend yesterday from work, and he's talking to his financial advisor right now about what their strategy should be moving forward. And we got into this discussion about the Dow Jones and uh, support levels and where we think things are headed, when it comes to technical analysis and stuff like that. So I just want to talk about that briefly as well, and how you can implement an 80-20 strategy into investing. And it really doesn't matter if the markets are up or down when you're following this strategy. So it's really kind of a nice strategy. At least I like it anyways, because I've been applying it for about 5, 6 years now. Um, and it doesn't really, I don't care if the markets are up or down really. So we'll go into that here in a little bit. But what I've got on my screen here is the Dow Jones. And this goes back to March timeframe when we went into the pandemic, okay? So you can see we basically broke through our weekly support line up here, and we came down to around like 18,600 ish, 18,800 points. Took a double bounce, came back up. I was under the impression that this weekly support would act as resistance and push us back down. Um, Keep in mind, this line I drew here is from way back in March. Okay, so none of this right in here had even occurred yet. So now I'm coming back to it. I'm just looking at it. We got a double top on the weekly chart here. We've got a double top on the daily chart as well. That is a very, 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 very strong signal when it comes to a reversal pattern. And normally what you'll see is a double top like this before the price starts coming down. Okay, so what I'm expecting, and I could be wrong on this because there's not 100% certainty when it comes to looking at technical analysis on charts like this, but my projection here would be that the Dow Jones and overall stock markets are coming down. You're going to see them drop off at least 2,000 points, and we should come back down to weekly support at about 25,240 points. Okay, so that we still have a ways to go. I mean, we're at 27,685 points. We need to shed a few more thousand points off here just to make it down to weekly support. Keep that in mind, because if that happens, people are gonna crank up the fear, uh, especially with the media, and they're gonna try to scare folks. Okay, just that's as simple as it is. And they're gonna try to get people worried that the stock market's collapsing. Okay, maybe it does. Maybe we take a 30% hit or a 40% hit, and we end up back down here at 15,847 points, right? Sounds pretty bad, right? Not really. I mean, if you're looking at this from a investor standpoint, you should be looking at it as a buying opportunity, okay? Because here's the thing: if you go back to the weekly, and we've talked about this before, if you go back to the weekly chart on the Dow Jones, okay, we can go all the way back. We can go all the way back to February of '09 and look at that uptrend from February of '09. That's on the weekly chart for the Dow Jones. That is a overall major index for the stock market, and we have dropped how many times here? Let's go ahead and uh, let's go ahead and let's see. We had one here. We had a drop there. We have a drop here, and we've got a drop there. So we've got maybe 3 times. You could count. No, that's not below support. We had one here. Okay. So since 2009, you've had 4 times, just 4 times, where the market fell below the support line. I have never in my life ever seen an asset that has done that. Okay, ever on any free market. Hey, I can pull up chart after chart after chart and go through and look at the weeklies, and you're going to see something, a pattern for an asset that just goes up and down. Okay, and it's consistent. That is what gives you fair price discovery in a stock market, like I've said before, I think the prices are way over inflated right now. There's no price discovery mechanism on these stocks, and we're coming down. Not to mention, you got to look at the time frame right now. The elections are coming up. Okay, in less than what 10, 11 days or something like that, November 3rd. So we're approaching the elections. Things are going to get crazy. We all know that, and that's really one of the only tools that Trump has used in his back pocket continuously to try to win voters. Okay, is this stock market? You got to keep that stock market up. You got to keep the 401k up for everybody. Again, that goes into the Fed too. The Fed plays into that because they want to print up money and keep this thing propped up because that's what people look at. They think that the stock market and the real economy are correlated somehow, and they're not. I've said this like 2 or 3 times, in the past 4 years to people, and they just can't get that through their head. That's what I'm trying to show you here is there's no correlation between the real economy and the stock market because they prop the stock market up continuously. Okay, they're starting to do that in the real economy too with all these bailouts and not allowing the big corporations to fail because you kind of need some of that for the stock market stuff. But at the end of the day, they're two completely separate, different things. So where do I expect us to go? Again, I think realistically we need to come back down to about 15,878. Don't panic if the market starts shedding off some points. But if you look at where we're at, going back to December of 2015, 15,800 points would put you right at a support level. Okay, where we probably should be, for the time being. I mean, we could go down to the bottom here, which would have been in 09 of February. Okay, remember this is around like 2008, or a little after 2008. The market started bleeding off, and I mean back then we were at 6,300, 6,400 points. Okay, so that would be like an all-time bottom from where we're at. That would be a huge, huge market crash. That's a ton of wealth being wiped out. I don't know that they'll allow it to go that low without trying to save it. But get ready for a deflationary event. I think it's coming. And with that said, it's like, again, what do you do? I was talking to my friend from work. He was talking about his financial advisor. I asked him what his financial advisor was recommending. Okay, this guy's financial advisor was recommending that they go ahead and put some money in and play. And they do some short-term trading based on the central banks, pumping up the markets. And he keeps trying to entice him to get in, and he's like, well, I don't know if that's a good idea. So he asked me what I thought, and I was like, dude, you got a double top on the weekly and the daily right now. That's a strong reversal pattern. You got your support levels here. If you want, and this is just my recommendation because this is what I do, do an 80-20 approach. So you take 80% of your investment, put it in long-term type assets that might spit off some passive income, and then you put 20% into short-term where you can try to time some of the markets like this or make short-term trades where you go in for, say, a couple days, maybe a couple weeks, maybe even a couple months, but then you get out with a profit. And what you end up doing is you take that 20% of whatever it is you're investing, you allocate just a little bit of the profits that you've made on these short-term trades. It's completely up to you what you want to do, but you allocate some of those profits over to your long-term 80% investments that are spitting off passive income for all intents purposes, and you can buy up more passive income and get it compounding and earning you a higher yield year over year with your passive income, and you're doing it basically with other people's money because you're creating that money. You got your own basically print press with that 20%, and you're just making short-term trades and creating money that way. So you're building up that trading account. Then you've got 80% of your cash, right? Let's say you get a paycheck every 2 weeks, and you're taking one of those paychecks and you're doing 50% of it and you're investing it into your 80-20 strategy. Of that 50%, you take 80%, you allocate that as well into the long term. And the thing is, with the long term stuff, you really don't have to pay attention to the charts like this, because what you're doing is dollar cost averaging in, and you're buying at any price. And so the theory is behind that is, when you do it that way, no matter the price, whether it's up or down, you're going to average out much in a much better position when you go to retire and you want to liquidate that. Chances are you're going to be in a pretty good position when it comes to being a profits, because it doesn't matter the price. You're buying at the lows, you're buying at the highs, and ultimately long term that just averages out to a nice healthy profit. So that's the 80-20 rule. If you ever hear anybody talk about 80-20 as a strategy, that's what they're referring to. But with that said, guys, get ready. We're in for a wild ride for, I'd say, at least the next couple weeks, even after the elections, because we have no idea what's going to happen here. And all I'm looking at right now financially is the stock market. I expect a big drop. And with that said, just remember, if it's just a couple thousand points, don't panic. We could go much lower than that. But anytime you get big drops like this, I'm an investor, okay? I'm more of a long-term guy, but when I see stuff like this and I can prepare for it, on that 80-20 strategy that I'm talking about, it's a good time during times like this, when you've got the expected downturn reversal, and it actually, if it kind of plays out or it falls through that weekly support, we don't get a bounce off of it. Look, get ready. Have some cash available if you can. And that's when blood's on the streets, that's when you want to buy. Okay? That's what good investors do, and that's how you make great profits, especially long term and even short term. Okay? So keep that in mind. And with that said, guys, take care, and I will talk to you here probably in a couple days. Thank you.